Billionaires don't pay less tax because they cheat. They pay less because they understand the rules. Labor is taxed hard. Capital is taxed softly. Money earned with time is punished. Money earned with assets is rewarded. This isn't unfairness by accident, it's design. The shift isn't anger, it's awareness. When you understand how income is structured, taxes stop being a burden and start becoming a strategy. What if I told you that billionaires often pay lower tax rates than middle-class workers and it's completely legal? Everyone pays taxes: income tax, sales tax, property tax. And most people pay far more than they need to. Not because they're doing anything wrong, but because they don't understand how the tax system actually works. The tax code isn't designed to be fair. It's designed to incentivize certain behaviors, and wealthy people understand exactly which behaviors to adopt. Rich people don't break tax laws, they use tax laws. There's a massive difference. Today, you're going to learn the legal strategies wealthy people use to minimize taxes, why the system is structured this way, and which strategies you can implement regardless of your current income level. Let's start with the uncomfortable truth about how taxes work. Problem 1. Earned income is taxed highest. If you work a job and earn a salary, you're paying the highest tax rates. Federal income tax up to 37%, state income tax up to 13% in some states. FICA taxes, Social Security plus Medicare, 7.65%. Total, over 50% in high-tax states at high incomes. Meanwhile, someone living off investments might pay 15 to 20% total. Same income, wildly different tax rates. Problem 2. Taxes are withheld before you see the money. Your paycheck is taxed before it hits your account. You never see the full amount you earned. You get what's left after taxes. This makes taxes feel inevitable and unchangeable. Problem 3. W-2 employees have the fewest deductions. Business owners can deduct home office, vehicles, meals, travel, equipment, phone, internet. W-2 employees? Almost nothing since 2018 tax law changes. You pay tax on nearly every dollar earned. Problem 4. Most people don't understand the tax code. The U.S. tax code is over 70,000 pages. It's deliberately complex. Most people don't know what's legal, so they overpay out of ignorance. Problem 5. The system rewards capital over labor. Income from work is taxed heavily. Income from capital, investments, real estate, businesses is taxed favorably. The system is designed to reward wealth accumulation, not labor. The shift: stop thinking taxes are fixed and unavoidable. Start understanding the legal strategies that minimize them. Rich people approach taxes completely differently. Principle 1. Income type matters more than income amount. Poor/middle class thinking, how much do I make? Wealthy thinking, what type of income am I generating? 3 types of income, taxed differently. Earned income, the highest tax. Wages, salary, tips. Taxed up to 37% federal plus state plus FICA. Fewest deductions available. Portfolio income, medium tax. Interest, dividends, capital gains. Long-term capital gains, 0%, 15%, or 20% federal. Short-term capital gains taxed as ordinary income. Passive income, lowest tax. Rental real estate income, business income you don't actively work in. Special deductions like depreciation available. Strategy: shift from earned income to portfolio and passive income over time. Principle 2. It's not about how much you make, but how much you keep. Someone earning $200K paying $80K in taxes keeps $120K. Someone earning $150K paying $20K in taxes keeps $130K. The second person is financially better off despite earning less. Rich people optimize for after-tax income, not gross income. Principle 3. Deductions and credits are the game.
The tax code is full of legal deductions and credits, but only if you know where to look and qualify. Rich people structure their finances to maximize these. Standard deduction, $13,850 single or $27,700 married for 2023. Business owners' deductions, often $50K to $200K plus, depending on business. One has far more tools available. Principle is wealthy people don't pay less because they cheat. They pay less because they understand how the game is designed and play accordingly. Here are the actual strategies, from simple to advanced. Strategy 1. Maximize retirement contributions. Anyone can do this. 401k, $22,500 per year 2023, $30,000 if over 50. Traditional IRA, $6,500 per year, $7,500 if over 50. These reduce your taxable income dollar for dollar. Example, earn 100K, contribute 22,500K, only taxed on 77,500K. At 24% tax bracket, that's $5,400 saved immediately. Advanced version, Mega Backdoor Roth Solo 401k for self-employed, up to $66,000 per year. Strategy 2. Start a business, even a side hustle. Once you have business income, you unlock massive deductions. Home office deduction, portion of rent or mortgage, utilities, vehicle expenses, mileage or actual expenses, equipment and supplies, business meals, 50% deductible, travel for business purposes, phone and internet, professional development, health insurance for self-employed. Example, you earn 80K W-2, start a 20K side business with 8K of legitimate expenses. Instead of paying tax on 100K, you pay on 92K. At 24% tax bracket, that's $1,920 saved. Strategy 3. Real estate investment. Real estate has the most powerful tax advantages. Depreciation, deduct the wear and tear of a property even though it's usually appreciating. Example, 300K rental property, depreciate $10,900 per year for 27.5 years. If your rental brings in 15K per year profit, you report only $4,100 as taxable income. You made 15K but only pay tax on 4,100. 1031 exchange, sell a property, buy another, defer all capital gains indefinitely. You can build a real estate empire and never pay capital gains if you keep exchanging. Passive loss deductions. Rental losses can offset other income with limitations. Strategy 4. Invest for long-term capital gains. Hold investments longer than 1 year before selling. Short-term gains under 1 year taxed as ordinary income up to 37%. Long-term gains over 1 year taxed at 0%, 15%, or 20% federal. Someone in the 37% bracket pays 20% on long-term gains, nearly half the rate. Strategy: buy and hold investments, don't trade frequently. Strategy 5. Use tax advantaged accounts strategically. Roth IRA, contributions taxed now, growth and withdrawals tax-free forever. HSA, health savings account, triple tax advantage, deductible contributions, tax-free growth, tax-free withdrawals for medical. Max it out, $3,850 individual, $7,750 family, 2023. 529 plans, tax-free growth for education expenses. Strategy 6. Harvest tax losses. When investments drop in value, sell them to realize the loss. Use losses to offset gains elsewhere, reducing taxable income. You can deduct up to $3,000 per year in losses against ordinary income. Then buy back a similar but not identical investment. This is called tax loss harvesting, completely legal. Strategy 7. Qualified Business Income Deduction, QBI. If you own a pass-through business, LLC, S-Corp, or sole proprietor, you may deduct up to 20% of business income. Example, 100K in business income, 20K deduction, taxed on only 80K. This was added in 2017 tax reform and is huge for small business owners. Strategy 8. Charitable giving with appreciated assets. Don't donate cash, donate appreciated stock. You get a deduction for the full market value and avoid capital gains tax on the appreciation. Example, stock bought for 5K, now worth 20K. Donated, 20K deduction, 0 capital gains tax paid. Donate cash instead, 20K deduction, but you paid 15K capital gains tax when you sold. Strategy 9. Use an S corporation to reduce self-employment tax. Self-employed people pay 15.3% self-employment tax on all income. S Corp strategy. Pay yourself a reasonable salary subject to payroll tax. Take the rest as distributions, not subject to self-employment tax. Example, 150K in business income. As sole proprietor, pay 15.3% on full 150K equals $22,950 in self-employment tax. As S Corp.
Here's the ultimate truth about taxes. They're one of your largest lifetime expenses, often bigger than housing, cars, or education. Yet most people spend more time planning their vacations than their tax strategy. Over a 40-year career earning $75K a year with a 25% effective tax rate, you'll pay $750,000 in taxes. Reduce that by just 5 percentage points through legal strategies, and you save $150,000. That's real, life-changing money. The mindset shift. Stop thinking, what do I owe? Start thinking, what's the least I'm legally required to pay? Stop thinking, taxes are fixed. Start thinking, taxes are the result of my financial structure and I control my structure. Every wealthy person you know has a tax strategy. Every broke person you know has a tax bill they accept without question. Starting today, commit to learning one new tax strategy per month. Implement what you can now. Plan for strategies you'll use as your income grows. Hire a real CPA who specializes in tax strategy, not just compliance. The system is designed with legal ways to minimize taxes. The wealthy use them. You can too. It's not about cheating. It's not about loopholes. It's about understanding how the game works and playing it intelligently. The tax code is 70,000 pages of opportunities disguised as complexity. Stop overpaying out of ignorance. Start keeping more of what you earn through knowledge. Rich people don't pay less because they're lucky. They pay less because they're informed. Get informed. Keep more. Build more wealth.